This is a Floor Traders Club Chicago online educational trading channel update. Presented in an educational format only, and nothing is to be taken as trading advice. In addition, no presentation is being made that any account will or is likely to achieve profits or losses similar to those predicted or shown. Sponsored by the Floor Traders Club Chicago, online educational channels and workshops. To get a trading edge now, join our See It Here It Live educational trading channel, broadcast trading days, online, live from the trading pits in Chicago to your PC via live audio and real-time charts. Starting at 8 a.m. Central Time at www.floortradersclub.com. That's www.floortradersclub.com. You must assess the risk of any trade with your broker and make your own independent decisions regarding any securities, futures, options, or any other financial instruments mentioned or shown. Trading futures and forex or any other financial instruments involves high risk. Please consult a licensed financial professional. Please review and be aware of the additional risk disclosures and disclaimers displayed. And now for your update.
Okay, good morning. Today is Wednesday, 2010, and we're seeing that the S&Ps are pushing a little bit up towards our highs on the face or the heels of reaction to yesterday's pretty favorable FOMC results that were released. Lower interest rates for an extended period of time, plus the fact that the economy is slowly getting a foothold and making a move to the upside. This is what the Fed thinks. So it's given a lot of impetus to S&Ps and also to the bond market, as the bond market is on their highs, recent highs as well. In contrast to what we usually talk about when we have inverse trade, when the S&Ps rally, the bonds also kind of break. But the last week or so, both markets have held on a very steady pace to the upside, with the bond on a 30-year yielding 4.56 right now, almost at that 4.5% yield. 10s are yielding 3.63. So they we talked about yesterday, before the announcement was made, how the bonds were strong, basically simply due to the fact that the market was anticipating lower interest rates for an extended period of time, and that's was taking any pressure off the bond market. So it's also a favorable report to the equity market as well, as they have also rallied, and they're pushing up on these highs also. So let's give a recap here. Let's look ahead for what's going on for the day. As far as any reports were concerned, there was a very bullish inflation number. PPI came out, and they were expecting minus 0.2. They came out at minus 0.6, a very bullish number. And that's also adding a little fuel to the upward push as well. And I'm going to give you the S&Ps right now. The S&Ps are pivot today is going to be 1157 with resistance at 1160, 64, 68, and then 77. Support down below is going to be 1154, 1152, 49, and then 44. So ranges have kind of tightened up over the last couple of weeks, and you're not getting huge movements, but you're getting a steady upward push. So the trend is to the upside, but the ranges have been kind of not as crazy as they have been, and that's, I think, good for traders. So we can keep these levels. As you can tell, the downside levels are kind of tight, simply because there is more support being laid in there as the markets have been going up. They've been giving us more support levels. The bond market today, the pivot is going to be 1729, and it's trading there right now with resistance up above at 1806, 1809, 1814, and 1819 is big. Support down below at 21, and they went down there this morning after a number right on our green band there and bounced off it very nicely. Underneath that, support at 1717, 1712, and 1707. Okay, market opens up here in about just a little bit over 3 minutes. Let's see what they're going to start doing, if they're going to continue this rally. A little bit of resistance above. We talked about the 61 level being our target, and they got we have right now 60 and then 64 above that. So as the market keeps going up, our targets have increased just a little bit. In the bond market, you just gotta, it's trading right around the pivot, so you've got to give it a little bit of a chance here to decide what it wants to do in the face of all this news that it's trying to digest, and see what these guys want to do with this market, as the yield again on the 30-year is 4.56. All right, we'll get back here in a few minutes.
This was a Floor Traders Club Chicago online educational channel update, presented in an educational format only, and nothing is to be taken as trading advice. In addition, no presentation is being made that any account will or is likely to achieve profits or losses similar to those predicted or shown. Sponsored by the Floor Traders Club Chicago online educational channels and workshops. To get a trading edge now, join our See It Hear It Live educational trading channel, broadcast trading days, online live from the trading pits in Chicago to your PC via live audio and real-time charts, starting at 8 a.m. Central Time at www.floortradersclub.com. That's www.floortraderswithansclub.com. You must assess the risk of any trade with your broker and make your own independent decisions regarding any securities, futures, options, or other financial instruments mentioned or shown. Trading futures and forex or any other financial instruments involves high risk. Please consult a licensed financial professional. Please review and be aware of the additional risk disclosures and disclaimers displayed. See you in the channel.